Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, May 14. The year's 2021. Let's talk trading. It's time for the weekly wrap up. And this video, just like all the other videos, are for educational purposes only. Your results may differ from mine. And risk management. Never lose any more on any one single trade than you're willing to lose. Brain management. No fear, no regret. Pain doesn't come from the market. Pain comes from your reaction to the market. Finally, money management. Take profit before the market takes it back. Okay, end of the week. We can see that all the gaps filled. Yeah, I made I forgot to actually make the video Sunday night. I don't know. I don't remember how that happened, but all of a sudden Monday I realized I didn't make a weekly open and gap video. But all the gaps, actually all the gaps except for one, the Euro CAD. This one right here did not fill the gap. So most of you weekly open gap traders were definitely paid off. Very interesting week here. We had a big range the first day. We barely broke out on Tuesday, and then the rest of the day we stayed within the weekly open range. Our monthly open range, we're 161 pips above it at the moment, and 389 pips above the opening range for the year. If we compress the chart, we can see where the year started out. Once again, close open 450 pips above the yearly open. You can see we put that yearly high in. Let's see, what date was that? Back on February 21, or the week. So inside bar traders were definitely paid off this week. You can see here 8 days ago we had an inside bar, but that was 8 days ago. So actually this week didn't happen. Who did get paid off were the monthly inside bar traders, because this was the Monday bar. You see we broke through that high that happened 2 months ago, and right now we're 76 pips above it. But that was a nice breakout. On the daily, only 75 pip range. I guess traders got tired after this week. There were some big ranges there. Right now we're 15 pips over the previous day's high. So anybody taking the previous day's high breakout rewarded once again. Buy zone, we had the pivot point. Yesterday's was missed. Today's pivot point was just below the open, got taken out that first hour. We launched through the buy zone and took out that missed pivot. Red rats, not much of a feast for the red rats. Seems like price keeps pushing up, but if you took some rat reversals inside of the red rat zone, you could pick up some 5-10 pip trades maybe. The pivot traders, on the other hand, once again, they were paid off. And in fact, I heard from, I heard from one trader that they were doing well with pivots. And I heard from another trader that was doing well with the wick zone. So it's always nice to hear when I've helped fellow traders out in some way, shape, or form. But you can see here we had a missed pivot 1, 2, 3 days ago. That got taken out 2 days ago. Yesterday's missed pivot got taken out today. So missed pivot traders were definitely paid off. And you can see we only have one missed pivot now from February. But if you remember before, there was a couple sitting up there, and I'm not sure which one got taken out most recently. But you can look over here at the chart. You can see all the missed pivots from February that have been taken out. So the one right now is at 2 is this one right here, February the 5th. So far we've missed it was missed by 10.7, filled 16.5 of it, but there's still some missing here. So at 13, I'm sorry, at 0.3644. which is this one right here. But actually, yeah, that's the February 221. And that's interesting because isn't this is 510. So maybe we have two missed pivots right around the same. Or am I reading something? Oh, no, this is 36. And this is 39. See, the 36 is right here. Wick zone. Once again, taking the breakout of the previous day's high was profitable. Oh, and there was a trader on YouTube was asking about doing something fancier with the frequency distributions. I think really you probably need to use the price travel analyzer on that. And secondly, I think you might be getting too cute. You're starting to split hairs. I mean, remember, 20% of the effort will get you 80% of the distance. To get that last 20% requires 80% of the effort. Don't be greedy. Oh, very interesting on the ranges here. You can see on the Wednesday and on Monday we had some nice movement there, but now we're back down in the 20 percentiles past couple of days here. The high minus close minus low. For you rat zone traders, you can see once again paying out, but the high minus previous high for the breakout and the low minus previous low for the breakout, when it hit nicely. But 3 days ago was about the only one where there really wasn't a big move up. And if we switch this over to the weekly, you can see here a nice 75 high minus close, but high minus previous high was 161. Nice breakout there on the weekly. And we can switch it one more time over to the monthly. High minus previous high, 158. So taking those breakouts at the previous day, month, week highs, horizontal line trades, very simple to execute. Some people, they swear by those breakouts. Looking here at a Walmart chart. Actually, I've called this PA simple. I've kind of complicated it a little bit. If you're wondering, we've got the 3-level ZZ. Let me just show you the indicators. And you've got some on here that you don't have yet because I haven't released them. The price action high-low indicator. And what that is are these little arrows. It's something I was working with another trader on something, and it had this one line of code in it. And I thought that one line of code was kind of interesting. So I wrote some multimeters and indicators around it. The first one was the indicator, and there's a multimeter. And what I'm using it for is a gauge to tell me if I should wait or enter a trade, and then if I should wait or exit the trade. And usually I look at it on the 1 minute time frame. So right here we got a 3-ball. Indicator says it's time to get in the trade, and then the indicator said it's time to get out the trade. So right there, a nice little move. And then here off a 2-ball, indicator says time to get in the trade. And then indicator says get out, get back in. So I don't use it standalone. I was also using it with the higher low, lower high indicator, which is right here, which I still haven't. This is actually part of TRO HL5, which I'll be releasing to those who donated in 2021. I'm going to try and get that batch out. If I don't get it out this weekend, almost for sure next week. So give you guys something to look forward to. And along with the multimeters here. I just been testing them out, trying to make sure I got the bugs worked out. The multimeter here, and this is the indicator here. Actually, I think I might have this one turned off. No, it's still turned on. But you can see right here what happened. Price made a higher high right here, then made another higher high. And so this was the highest low over the last 34 bars, and that 34 matches the 3-level ZZ indicators here, period 334. So that's why I'm using 34. So right there, there was the highest low, HL, happened 27 bars ago. And so you take that short, maybe took a little heat, but then it paid off, hit a 2-ball. So probably somewhere down here would have been you take your profit off the table. You can see right now we're 7 pips, 6 pips now below. Oh, and there's something else here. I've actually changed the one thing on HL5. I gave you an option now to display decimal digits. So if you put 1, you can see here it takes in consideration that 5th digit. So right now 4.5 pips. So when I'm trading, if I see this hit 2, my finger's on the close button, because if it drops below 2, I'm out. And that's just how I like to trade it. So right here, as you can see, we put in a 3-ball. It went up, but now it went up through that lower high that happened 3 bars ago. And if you could have gotten in, you'd be up 1.4 pip with the 1-ball, and probably you could sit there and see what happens, and now you'd be up 3 pips. You got a 2-ball. Got 3 seconds left, and a new bar opened. If it ticked down, I'd be out. If it ticks up, I'll stay. It just ticked up. The thing is, at this time of day on a Friday, this thing could tick down huge. You can stick it, and sometimes you just trade like 3-ball to 1-ball, 3-ball to 2-ball, 3-ball to 3-ball. Just depends on how price is moving. Up 3.7 at the moment. 3.8, 4.1. So you can see right here, and it just pulled back down. You have to decide how much money is enough on any one given trade, to lose or to win. It's, sometimes you might want to try and ride it. Other times you don't. So we could switch back over here to this indicator and see what it says. It's saying stay in the trade, stay in the trade. So sometimes if you let the indicator tell you, if you can stick with it, then that keeps the emotion out of the trading. That's one of the nice things. The indicator is just going to compute based on mathematical formulas. So you can just sit there and let it go. And then as soon as if it turned red, then you could exit out. And these, just so you know, when you get your hands on this part of the code, these dots, they are dynamic. So they will change colors in real time. Some people call that repainting. I don't. So yeah, it's blue now, but this could turn red. So it's just something. So right there, you see a red. It could turn blue if it goes back up. But I think there was a nice profit to be had. See, now we've already switched and heading the other way off of this trigger. So it got here, put the 2-ball in, opened up, down, boom, out. And actually, you didn't even have a chance to get in. So, fellow traders, be safe this weekend. It's not what you trade, it's how you trade it. Drain the banks. This is the Rumple One. Over and out.